Alrighty. Good evening, everyone. Thanks for joining us here today. Today's webinar is all about helping take control of your credit, unlock better financial options, and ultimately move closer to your goals, whether that's buying your first home, refinancing, or just getting, your financial house in order. So I'm super excited to introduce our special guest today, Mr. Calvin Russel, the founder and CEO of 850 Club Credit Consultation. He's a certified FICO professional, a licensed real estate expert, and one of the most trusted voices in the world of credit education. He's actually helped thousands of clients nationwide improve their credit scores, understand the credit system, and position themselves for long-term financial success. You may have seen some of his videos online or caught one of his elite power talks, but tonight you get direct access. So whether you're starting from scratch, rebuilding after some setbacks, or you just want to fine-tune your credit profile, Calvin's going to break down exactly what works, what doesn't, and what you can start doing today to make some real progress. So Calvin, welcome to the webinar. We're happy and pumped to have you here.
Awesome, man. Listen, I'm excited to be here. Thanks for the invite.
Absolutely.
All right. So I'll go ahead and take over from here. First off, again, thanks again, John, for having me as well. And listen, many of you all who are watching this right now, I know what you're thinking. I want to go into homeownership. My credit's not the best. Where do I go from here? Okay. Well, listen, this is exactly what this presentation is all about. So I'm going to go ahead and break down how credit works as far as you need it to be for home ownership. Okay. So I'm going to go ahead and share my screen here. All right. And okay. And then, John, if you can, let me know if you can see this okay when it pops up.
Yep, got it right here.
Okay, awesome. All right. So today, guys, we're going to be talking about credit. And here's the thing. You're closer than you think. Okay. So first off, who we are. Okay. So I am a licensed realtor as well. And not that, of course, you guys are going to buy homes, with John and things of that sort. But I'm saying this because I know the industry. So I know what banks are looking for. I know what the lenders are looking for. And so that just simply means we're not going to give you bad information. We're not going to send you off. Okay. I've also been a top producer since 2020 as well, showing people how to increase their credit scores and then go right into home ownership. Okay. And then my wife and I, we bought our first property at 25. We bought our second property at 28. And then we bought our third property at age 32. So now we're due to buy another property here very soon. Okay. We are the owners of 850 Club Credit, and we've been helping people just like you since 2012 accomplish their credit goals. So we help people do more than just homeowner. Lenders love to see that as well too. And service is our top priority.
One second. Okay? I think you broke
up
there. As you can see here,
we have over.
Oh, sorry. I think you broke up there for just a second. Can you go back to that last slide?
Okay.
My apologies.
Yep, the last piece. You're good. It could be my internet. It's been, it cut me off earlier. So how about this? Is that good? Down at the bottom right there?
Yeah, let's go to owners of 850 Club Credit.
So as I mentioned, my wife and I, we are the owners of 850 Club Credit. Okay. And so we've helped thousands of people just like you qualify for home ownership and accomplish their goals. Okay. Now I know what you're thinking. You're probably saying, okay, listen, there's a lot of credit companies out there, and you're right. But here's the thing. We're not hiding. Okay. We have over 197 Google reviews. These are, and of course, that's a 4.8 rating as well too. And so again, we've helped so many people, and we actually give great customer service while doing that as well. Okay. And of course, many of you all, like John mentioned, have probably seen us on YouTube. This actually is an old screenshot, but we have over 149,000 subscribers on our YouTube channel, and it is growing the way it's growing because we're giving so much great, are learning the information, and they're executing on what we're telling them to do, and they're starting to see results right off the back. Okay. So a lot of times, you can, in today's world, you can really judge a person by how much information they're willing to just give you, for free, because that goes to show you that they're experts in the field. Okay. And so this is just a glimpse here of just all of the people. Well, not all, I'm sorry. This is just a handful of people that we've helped. Okay. No matter what their age is, no matter what their race is, no matter what their background is, if you want to qualify for home ownership, then we can most definitely help you do so. No matter if you're in the 300s, 400s, 500s, or even 600s, again, we can help you get to where you want to be. Okay. Let's go to break down credit 101. What banks and lenders actually look for. Okay. So let's go over some basics. As we know, major credit bureaus are TransUnion, Equifax, and Experian. Okay. And of course, Vantage 3.0 and 4.0 as well. Okay. Now, to kind of spend a little time on this, mortgage companies are now going to be spending a little bit, I won't say more time, but they're now going to be considering both of the scores. So you're going to start to see an increase in this in the next 3 to 6 months for sure. What does that mean? That just simply means that you want to keep an eye on both scores. You want to make sure that both scores are improved for sure. Okay. Now, the way that you could do this is, of course, by looking at your reports. We recommend starting by going FICO.com. It's to show you not just your FICO scores, but that's going to be your mortgage scores. Okay. So when you're looking to buy a home, they look only at your mortgage scores, not your overall scores, not your credit card scores. A lot of people don't even know that you have way more than just 3 scores, okay? And FICO breaks them down into industries or essentially categories, and that's how you can see that score. So if you go to myfico.com, you get the advanced plan, and you look at your mortgage scores, those are going to be the exact same scores that your lender John would easily see, okay? So if you want to see what he's going to see, that's how you do that, okay? And then of course, you have other platforms like Credit Karma, Identity IQ, and the list goes on as well. Okay. Where do I leave off, John? Can you hear me?
Yeah, I can hear you now.
Okay.
Yeah, so you should be fine. I was monitoring it.
Okay.
Can you give a
That's fine.
quick
I can start.
recap on the
Do
last
this slide
slide?
over.
Just a quick recap
This
is
one?
fine. That one, yep.
Those ones? Okay, cool. All right, got it. Okay. So let's go ahead and go over the credit basics. Okay. A lot of people don't know this, but there's 3 major credit bureaus, and that's going to be TransUnion, Equifax, and Experian. Okay. So now these credit scores are going to range anywhere between 300, that's the low point, all the way up to about 850. Okay. Then you have credit algorithms. You have the FICO score, and then you have the Vantage scores as well. And right now, the 3 point hear a lot about Vantage score, especially in the next 30 to 60 days, because a lot of mortgage lenders are now able to use those scores. Okay. So yes, those are the same scores that are used by Credit Karma, that are used by Wallet Hub, Credit Sesame, and the list goes on. Okay. Now, if you want to see the same scores that John sees, you want to see the same scores that all these banks and lenders see, you need to go to myfico.com. Here's why. They're going to show you what they call your category scores. These are going to be your mortgage scores. Okay. When you're looking to go into, to buy a home, they're going to look only at your mortgage scores, not your auto loan scores, not your overall scores. That's how you see that. So if you want to see what John sees, then you need to go ahead and go to myfico.com. Okay. Now, there obviously are some other credit reports that are out there: Credit Karma, Identity IQ, Smart Credit, and the list goes on. I know what you're thinking. Well, Calvin, no one uses Credit Karma. Here's where you're wrong. Okay. As a matter of fact, because of this, Freddie Mac and Fannie Mae, they finally got the approval that they've been fighting for years to have an alternative to FICO, because they've dominated the industry since the 80s. Okay. And here's the thing: Credit Karma is 100% accurate. A lot of times people don't think that that's the case. And here's why. Credit Karma is essentially the Burger King of the industry. Okay. FICO is the McDonald's. It's more popular. It's more noticeable. There's more locations, right? You got it. Okay. Now with Vantage Score, a lot of banks and financial institutions use Vantage Score, and you're going to see a huge uptick in this, especially in the next 30 to 60 days. Okay. And here's why it's accurate. 2 reasons. Number one, that Vantage Score was actually created by the 3 credit bureaus. Okay. TransUnion, Equifax, and Experian. So that's number one. So they're getting the information directly from the source. And then number 2, Credit Karma is accurate because, again, it's not the score itself. It's actually the report which makes the score. And so the algorithm is going to look at that. Okay. So again, it's not that it's inaccurate. It's just you're going to see it 50-50 now. At first, it was 90% FICO, 10% Vantage Score or Credit Karma. Now you're going to see about 50-50, because at the end of the day, lenders like John, they want to make sure that you all get approved for what you're trying to get approved for. Okay. And Credit Karma is not the only one that uses that algorithm. You have Privacy Guard, Credit Expert, Identity IQ, and the list goes on. Okay. Now, 90% of lenders, of course, they're using FICO right now. As I said, that may change. But here's what I like to tell my client is that if your Credit Karma score is at 620 or higher, it's best practice that you go ahead and purchase my FICO so you can see exactly what your mortgage scores. Okay. So again, that way you can do that. Now, and then when you do look at your when you look at your own credit report, it doesn't affect the score in any way, shape, or form. Okay. However, if you have a hard pull, then that's going to be a little bit different. Okay. But again, it doesn't, this is the best investment. That way you can see where you are before you do the application and things of that sort. This is what we recommend all of our clients do. Okay. Now, I'm going to go ahead and give you guys some easy credit boosters as well. John told me to give you guys some freebies. So I'm going to give you guys some freebies while you guys are here. Okay. So here, the first thing you want to do is start off with your credit cards. I know it's easier said than done, because some of you guys have $1,000 worth of credit card debt, and some of you all are out here crazy with $20,000, $30,000 of credit card debt. But either way, you want to try to bring those balances down to about 10% or less. Okay. And so next is you want to remove yourself from authorized user accounts that have balances over 10% usage or utilization. So what does that mean? You guys know the term piggybacking or trade line or authorized user. It's all the same. But either way, how it works is when you get added onto someone's credit card, their payment history, it then is going to reflect on your credit report. This usually increases the credit score. However, there are some times where it makes your score actually go down, and it's actually hurting you more than it's helping you. Okay. So in that case, you got a few different options. One, you can remove yourself. That's going to be the easiest option. The other option outside of removing yourself is actually going to end up being, paying the balance down. Now, it doesn't make sense to pay the balance down with somebody else's balance. So again, try to get yourself removed from that situation. And number three, you want to add utility bills to your credit report, okay? And I'll go ahead and make sure that John gets a link so you guys can see how to do that as well, okay? But here's the freebie I wanted to give you all. Now, I got to give you a disclaimer. Now, this is not for everyone, okay? This is a $10 a month credit builder. And what this does is I recommend this for a lot of my clients, especially if they're in the 500s or less. Here's what people don't understand. Banks really want to see what you've been doing in the last, 90 days, 3 months, 6 months. They really want to see what you've done recently, okay? So can you buy a home, with the previous repossession? And it depends if you have rebuilt since that repossession. Can you buy a home after a bankruptcy? It depends if there's been enough time after the discharge and that you've actually been improving and working on your credit score. So something like this is great because it's only $10 a month for 24 months. It reports to all 3 credit bureaus. There's no credit check. So pretty much everyone's approved and there's no hidden fees. And here's the crazy part. I'm sorry, not the crazy part. This is the best part about it. Payment history is the single biggest factor that contributes to your credit score, okay? With the installment credit account, your monthly payments are reported to the credit bureaus. This means you're essentially just building, credit the easy way while you're continuing to bring your balances down, while you're continuing to rebuild those relationships with other banks as well, okay? So now, here are the scores that you need, and this is very important, okay? So number one, to get your foot in the door is where you're going to need a 580. Now, 580, to be honest with you, is going to be some red tape, okay? You really want to push for 620 or higher. The higher your score, the easier this loan process is going to be, I'm telling you, okay? So a 580, you can go with FHA or VA. You can talk to John to kind of clarify the differences between those. And again, there is going to be an approval, but you're going to have some stipulations, okay? You're going to need more money saved, possible higher rate, etc. Okay. Then you have between a 620, my bad.
Oh, no, yeah, you're good. So,
okay,
I mean, I would say for 580s, like, a lot of times, a lot of clients when they come to me, they think that they're automatically going to get approved just because they've hit that minimum threshold of 580.
Right.
To be completely honest, and you know this too, Calvin, like I would say the new minimum is pretty much 640. Like if you're thinking you're going to get any kind of grants, down payment assistance, or even just putting down 3.5%. And so like when you are getting an approval around that 580 credit score, keep in mind, you're going to have to make up for that, either your income or your assets that you have, and most likely both. I like to explain it like a 3-legged bar stool. You can like one of the legs can be a little bit weaker, but the other 2 legs really have to compensate for that, right?
Yeah.
And so like, for example, like I've had the lowest credit score that I've ever actually closed. I think it was like a 527 or something like that, if I remember correctly. Wow. And it was because they had, over $200,000 in reserves because they had just sold a home they owned free and clear, which that obviously more than compensates for, the credit score. And then they also had, the reason why their credit score was so low is they had 2 lates, on a credit card that had a balance of like $500. So in reality, it affects the credit score, but the overall credit profile was still pretty good. So yeah, just food for thought for sure. If you're going to be in that lower end of the credit spectrum, you need to have, some assets to compensate for that.
Absolutely. And I'm glad you broke that down as well too, because again, just because you have that 580, again, that doesn't mean it's going to be an easy situation. Like John just confirmed, the higher the score, the easier this loan process is going to be. Everyone's situation is a little bit different. And of course, everyone's credit profile is going to be different. So make sure you have everything else in place as well. Okay. But again, you're in that 620 to 850 range. Again, you're more than likely going to qualify for that standard FHA approval up to 4 units. Then of course, 680, this is where it's going to be a little bit easier to get that conventional loan. Can you probably get approved at a different score bracket? Yes. But again, you want to try to reduce as much drama as possible. Okay. And this is where you guys can get that, especially if you have high student loan debt or if you're looking to go into a second home purchase as well. And again, this is where my FICO comes in, as well to see those scores, prior to that. Okay. So now I always like to ask people if they've seen this movie. Some people haven't, but either way, we all know that this is Vivica Fox. But hey, listen, I can probably bet money. John's probably seen this movie, but he probably doesn't remember it. So John, do you know what movie this was?
It's the wrong question to ask.
I gotcha. Never mind. But either way, this was the car. She was sitting in the car. This was Don't Be a Menace. Okay. So this is your homework, guys. Make sure you guys go see Don't Be a Menace. But anyway, so the reason why I had this image in here is because a lot of people don't believe that they can go into home ownership, like John just mentioned, where a person was a 527, but they had, they had strong reserves, they had, money saved, time on your job, time at your address, money in your investment accounts. A lot of those things play a major role, okay? But again, you want to make sure that your score is as high as possible. All right. Now, here's another thing as well, too. Even though they look at all three scores, they really only need one, okay? And that is called your middle score, okay? The middle score is the score that is between the highest and the lowest scores. And let me show you guys an example of what that looks like, okay? So when you go to myfico.com, it's going to show you your mortgage scores. And of course, it's going to look like this. Now, it may not be specifically in this order, but let me break this down. So you take away the highest score. Well, essentially, you drop the highest score, you drop the lowest score, and then the score that's left over is going to be your middle score. And that's the score that they're going to work with. So in this example, the highest score is 656. The low score is 647. That leaves us with a 648 credit score, and that's what they're going to go by. Some people think they go by the average. Some people think they go by the score that's actually sitting in the middle. That is not the case. You drop the highest, you drop the lowest, and that's the scores that they're going to be looking at, okay? And as I mentioned as well, too, keep an eye on both scores, okay? For the most part, if you do something positive, it's usually going to affect both scores. If you do something negative, you guessed it, it's usually going to affect both score algorithms as well, okay? But keep an eye on both of them. But I did want to share with you all someone that was a 497 credit score. Now, income wasn't her problem, but she didn't know. And let me tell you all something. We don't know what we don't know. She had no idea that there was just a few things that she needed to put in place to purchase her dream home, okay? This isn't Photoshop and this isn't AI, okay? We got to give those disclaimers. But either way, she was able to purchase, this house. Actually, when she bought it, a little bit close to about $400,000 in the south suburbs. She sold that house for about $600,000 a few years later, okay? She's already on her third house, but this was her first home purchase. But I want you guys to hear a little bit of her story of how she went from a 497 to this home. Let's check it out.
Are you getting audio on your end on that?
I am. You're not? Okay, hold on. No
I'm
worries. Not. Okay, so here, what I'll do then, you could probably just cut out when I said I was going to play it, because sure. I don't think it's going to let me share my audio then if it's not already. So here, let me do this. Let me stop sharing and I'm going to share again. And it does say also share tab audio.
Yeah, try that.
Okay, let me do that then. I think, okay. Yeah, that'll work. Okay. Yeah, we're going to have action for sure now.
There we go.
Hold on. Okay. All right. So you can just edit it. I'm about to click play now then.
Hey, world. I just wanted to give a real life testimonial to 850 Credit Consulting and also to the owner, Mr. Calvin Russell, and how he and his company greatly changed my life. So when I first started with 850 Credit Counseling, I was pretty embarrassing credit scores because I was overcoming some irresponsibility of my past, allowing people to put some things in my name, as well as just, not being in a financial space when you're young and not being taught very, very heavily on credit and things of that nature. And then you make mistakes you have to fix later. So I was kind of in like the very low 500 credit scores. I want to say one of my scores was in the high 400s. It was pretty bad. And after talking with Calvin and meeting and setting up a plan, we came up with, just that, a plan. And he worked with me every step of the way. He kept his eyes on it and monitoring it and guiding me. And if I had questions along the way, if I did A, B, and C, for example, what would be the repercussions of that? What could I do to expedite it? And sure enough, in about a 6-month time frame, dedication, listening to what I was being told and guided, and him being there to work through all of the things and the issues and the logistics. He introduced me to one of his colleagues that also was the broker for home bridge loans for a home. And me, I've always dreamed about owning a home, but I never thought, I would be able to get like that dream house, I guess you could say. Even though I am in a place financially where I can, I just knew credit played such a huge part, and I did not have that part together. But when we hit about that 6-month mark, stretching into that 7th, my scores had hit mid to low 6s, and then slowly began to climb. And now where I am touching, itching, and scratching at that 700 club. So that was great. And in conjunction with that, with him also being my realtor, we found our dream home. Myself and my partner, we found our dream home, and I got approved for $367,000 house. Thanks to Calvin, thanks to 850 Credit Club, and we should be closing in about a week. And we're gonna have an amazing housewarming party on New Year's Eve, and everybody's invited as long as you're cool. And definitely have to give thank you to Calvin. He's patient, very patient, and he has a lot of knowledge under his belt, both being a realtor as well as being very passionate about 850 Credit Club. And as I continue to climb and continue to work with him, I definitely will recommend him and his company to you, because even I didn't think I could go from 497 credit score to owning a $367,000 house in less than a year. So definitely the results speak louder than anything that I can say.
Absolutely. So you guys can see right there that she was able to, again, turn that 497 into home ownership. Okay. And this is how she was able to do it. We were able to create a custom game plan for her. Okay. We looked at her credit report. We told her exactly what she needed to do. She followed that game plan step by step. And when you follow this game plan, and listen, success is inevitable. Okay. This young lady right here, believe it or not, quick story. She actually was living in a property, and she was living with her grandmother, and her grandmother pretty much had gotten to the point she had taken out multiple mortgages on the property, and for retirement, and she just got underwater. Like, she couldn't keep up with the mortgage payment, so she had to sell the property. And what was devastating was that my client wanted to save her grandmother's property, and there were other relatives living in the property as well too, but no one was in position to save the property, so her grandmother had to sell the property. The grandmother ended up selling the property. My client ended up finding another property, moving out, going to an apartment and such. And she says, you know what, I can never be in a situation again, where I'm being essentially put out, or I can't help my family save the property. It's too many of us in the family, and no one was in position to save the property. Here's where the story gets crazy. I went to college with someone, and he was posting on Facebook about how he had just bought a property that he had, renovated. Okay. And I asked him what the area was, when it was going to be done. He was like, man, bro, I'm almost done. And I was like, listen, I may have someone looking for, like that property, because it's in the area my client wants to be in. Listen, you won't believe me when I tell you the property that my friend from college purchased was the exact property that my client's grandmother sold about 8 months prior. Okay. He had delays, issues, contractor issues, all these things. And it literally gave my client enough time. She had no idea who owned the property. She had just moved on. The entire family moved on. By the time her credit was ready, her savings was ready, she was able to recoup that same exact property. Okay. If you guys are interested, I have the story on my YouTube. Unbelievable. But again, it was the game plan that put her in position. This couple, it was the game plan that put them in position. Okay. Listen, here's the thing. We can help you increase your credit score and qualify for homeownership. We have two options for you. Option one is our custom game plan. Now, this is a one-time fee. It's only $349. And listen, if we look at your credit report, we tell you exactly what you need to do. We know what John is looking for. We know what the banks are looking for, so you all can qualify for homeownership. You can scan this QR code, and I'm also going to put the link inside of the chat as well too. I'm going to send these links to John as well. So this is option one. Then option two is our 850 Club Elite Community. Now, with the community, this is only $39 a month. This is month to month. You can stop at any time. And listen, you don't have to get a game plan if you don't want to. However, you will just be throwing jello on the wall to kind of see what sticks. So we hold your hand, and you're in the community of over 200 plus people that have credit goals like yourself to buy property, to buy rental property, and things of that sort. And here's the great part about being in the community. You get a discount on the custom game plan. So instead of paying $349, you only pay $199. Okay. So this is the best value to go from. So no matter what your financial situation is, we can help you go into home ownership, because if you want to buy a home anyway, you're going to need some savings. You're going to need money put together anyway. So this should be a very small investment into yourself. And you got to ask yourself, when was the last time you invested in yourself so you can accomplish your goals? Okay. And so essentially that's where I wanted to go ahead and leave off. And then of course, John can go ahead. I'll turn it back over to you.
Yeah, absolutely. Well, I appreciate, you jumping on here and giving a lot of these insights, to, future clients and anyone else that's, currently watching this as well. And so, I just think it's really powerful when like you have all these testimonials that you've had and you've seen people go before you, right? I think that, every time that I speak to a client that is the first, home buyer of their generation or their family, as soon as they close on that first home, everyone else starts buying homes around them because they just needed to see somebody do it first, right? And so for anybody that's watching this, like take those first steps. You're probably spending more than $40 a month on subscriptions anyways.
That's
So,
right.
investing in yourself, they won't spend $40 a month to help them, build their credit, but they'll spend $150 a month between, Amazon Prime, Hulu, Netflix, Disney Plus, all these
That's
other
right.
things, right? So invest in yourself, take the time, and just a success story that I can share from myself personally and from all the clients that I've worked with over the past couple of years, just seeing that person that actually did the work, purchased the home, and then they come to me, let's say 4 or 5 years later, and they're going to sell that home and go buy another one. They've been able to build, sometimes over $60,000 worth of equity they're walking away from the closing table with. And that's
Wow.
real money you can use to pay down debt. You can use to put down the next property. You can use to pay for your kids' college. Like that's money you can actually start putting towards other things. And that's where really, that real wealth is built. So invest in yourself, take the plunge. Would love to see you guys in, the 850 Club and, being able to purchase your first home. So
Awesome.
perfect. I'm going to stop recording here.